Okay, we're back again. I had to take a little break, make some more coffee, you feel me? So, with that being said, let's see. I know a lot of people like trading oil. So let's see how we can approach the market trading oil. All right. Now, we're going to do hindsight because it's just going to work. I'm sorry. And it's also because we, um, I don't want my computer to start glitching and all that other stuff, which it has been doing. So let me see. Let me see what we are currently working with. I haven't traded oil in a little while now. So let's just go to a random range. All right, so this I wouldn't. You know what? Uh, we'll still use this. It's fine. It's fine. We'll just go back not too far. And then then we'll go through other charts as well just to confirm that you can use this model on any chart. It doesn't matter. Obviously, you guys seen it on my past videos, on my past live streams that I've been going live, that it works on the indexes and gold. So, okay. So here we have oil. And if we count, like, say we pass this high. Yeah, let's say that we pass this high, right? So actually, I want to use this. This is the high. So we passed that. Now we caught the buy up to that high. We got out the trade, and now we're waiting for market to show willingness to sell. So let's go to the 5 minute chart. All right. Now we are here and we passed that high. However, it looks like we are in a new week opening gap. So this was Thursday. That's wild. I don't know what happened there. At 3:30 in the morning, price just dropped. All right. So I'm gonna just say this because it gives it. It gives it. This here is 2 days. Here and here. Now, during the London kill zone, well, we look for kill zones. So the London kill zone starts at 3. Why at 3 o'clock we got this crazy breaker structure here? Whoosh, right? 3. That's when we know. And how do you know it's a clear breaker structure? Because all these lows were clean, taken, and the candle closed below all of this range. We trade to a fair value gap. Now, if you want to get really technical with this, I'm about to show y'all. So you see that clean break, and at the midpoint, we sell it. Now, once we get in that sell, and this is crazy because like at 3:30, price just teleported. Price literally just teleported right here. All right. Now, price teleported. So we had that crazy market structure shift on a 5-minute time frame. And it just kept going and broke this structure as well. And from there, you could just hold, 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 hold. And now, how I do the range is simple. From 20 days, 20 days, that's it. So, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. All right. So this is the range that we're currently working with. Anything above the 50% is premium, and anything below is discount. Now, in a store, when you go shopping, you go shopping, and you go into Louis V, and you see a belt for $1,500, right? Just guessing, it's 1,500. I only got one belt. That belt was like a very rare belt. That cost me 2,000, but I'm not even going. I even with the money I'm making now, I don't think I'll keep buying stuff like that. I don't I don't think I need to, honestly. All right. So what would you and all right, so you go into the store, you see the belt for 1,500. Okay, cool. Then you leave and you go into Nordstrom, right? You go into Nordstrom and you see the same exact belt for let's say 950. You waited until you seen the same belt that you wanted for a lesser price. It just took you time to get to that store from leaving the store and you waited. Or let's put it like this. You go into the store and you see the belt just came out. $2,000, right? Then you wait. A few months go by, you go back into the store and you see that the belt costs $1,200. Same thing. That's exactly what you're doing here. You're waiting. You're waiting for the price to drop to discount, And then if you was to be a business owner and you selling the belt, you want to sell at a premium to make more money, right? That's the easiest way I can say. Now, when I see, right, when I see price doing its thing, I want to check and make sure that there's fair value gaps. And see why not this fair value gap? Huh? Why not this one? There's a order block right here. Why not this? Well, I'll tell you why. Why would we want to buy at a just just when the sale started? You know what I'm saying? We just got on sale. This is we on sale right now. They just opened the door and it's a week before Black Friday and prices is coming down, but they're not down 100% yet. You feel me? So we wait, right? And what do we have here? All right, well, let's see. Here we have a fair value gap. For those who don't know what a fair value gap is, a fair value gap is see a gap between the wick of this blue candle here and the down part of the wick on the next candle here. This is a fair value gap. We've seen price actually come to it and react off of that. And it filled in that range, this whole range here, before completely coming down to this here is considered a breaker. That right there is considered a breaker. The mid part of the range, this is consolidation. So the mid part of the consolidating range, this is a breaker. And then we have this order block here. Okay. This order block here, coupled with a fair value gap and a breaker. Now, I just want to see something real quick. From the top of this range here, from the body of that candle to the body of this order block, it looks good. Look at that. Now, this right here is just your area of interest. Whatever you see here, price comes down, it reacts, and then it wants to go higher. So now our new range is from here to here, right? So again, before I go into this in depth, a little bit more in depth, I'm not a professional. I'm not a financial advisor. Don't watch me watch TV. I'm just showing you what I'm doing when I approach the market. Trading is a risky business. And if you do trade, just know that you're trading at your own risk. You can lose a lot of money trading. Okay? All right. So now we go into the smaller time frame. Now for oil, right? Oil trading is a little bit different. Okay? Trading is a little bit different. So in this area, if we already in this area right here, and we're looking to buy, right? We don't need to take it all the way up, right? We just need to take it to like a high. Obviously, you see that this high got taken. However, it took a little while to get there. You feel me? Took until the next day. But that's good because it's still a gain. You know what I'm saying? So what we do on a smaller time frame is what exactly we're doing on the higher time frame. If we know our bias is bullish, we only are looking for buys. So once we see a willingness to buy, right? We are actually, you know what? Let's go on the 1 minute time frame because I don't know. Actually, let's go on a 3 minute. So we're looking for a willingness to buy. All right. So we see consolidation. Now, I still could be wrong. We could go lower still, right? We could still go a little lower. But right now in this zone, this is what I do. I'm looking for a willingness to buy. When was a low last taken? Right here. Now, did this low get taken? No. Okay. Did it go higher? Yes, it did. It closed? Yes, it did. And when it closed above this candle here, the last low. Okay, did it retrace? Yes. Where? 50% of the range, right? At least the 50. And it did. Okay, cool. It did that. So now, does it break again? Yes. Does it go lower than this? No. Does it go higher? Yes. When it broke above and didn't go lower, is there a gap or a fair value gap? Yes. There's a fair value gap and a gap. There's actually a gap. Actually, you know what? Let me use this. There's a gap literally right here. And I don't even need that. I could just use this right here. Once price taps this, I'm holding. Stop loss is going to be behind this low since this was the low that took out the last low, previous lows. And it goes up now. Let's see. At the beginning of the Asia kill zone, or during the Asia kill zone, oil started rising, started going higher and higher. Now, say you didn't know when to get out, right? Did price show us? A willingness to sell? No. It showed a retracement and kept going. Same here, retracement, going there. And then, did it show? No. Did it show? No. Goes up, comes down. But did the candle close below these? No. Goes up, takes out these highs. Here, right here is when I would get scared because this candle closed below all these other candles. Closed below all these candles. Me, I would wait for the retracement, get out, and then I could get in. Goes literally to the 50% of this. You can see 50% of the range. Taps it and drops. Now, where do I think it's going? I have no clue. It could go to this order block and this area of interest because of the fair value gap that it left behind, which it did, and went right to the fair value gap. I mean, well, it went straight to the fair value gap and to the breaker. Actually, it flew past the breaker here, taps it, and reverses. So this right here would have been a good entry to sell from here to here. I would have got out here and then entered the sell. Get in here. I mean, get out here and then wait for a willingness to go higher. Why? Because guess what? From here to here is the range. We went from discount to premium, back into discount, and back into premium. Looks like, well, actually, no, we can continue higher from here. So, what about here? Does it show a willingness to go? Yes. Why is that? Well, we broke structure. This was on a 1 minute, 3 minute time frame. We broke this little consolidation area here. Shot up. Price closed. We're looking for a fair value gap and or order block. Well, guess what? Last three consecutive down candles. It was an order block. Price then taps it literally to the T. Pow, and takes off, going back into premium. Now, price still looks like it's trying to continue up higher. And we'll find out next week if it does. Let's go to another chart. Let's go to a different chart. But that's how you do it. You see, this is, yes, this is hindsight, but this is what I be looking for. That's why you see all these lines and boxes in your chart and on my chart when I come back and I show y'all what I've been doing. You know what I'm saying? This is why every single time I get on the chart, you guys see. lines and bars and empty spaces and all of that. All right. So fair value gap, order block, breaker block. Those three PD arrays, crucial. Crucial. Let's get it going on another chart. Let's see what other chart. I don't. Let's see. Let's go to GU. Right. Let's go to GU. Let me remove all the drawings so we can get a look. What's going on? All right. This here is the range. Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Well, my bad. We should have went from here. Actually, no, we should have went from here. So this is the last swing. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. All right, within this range, this right here will be considered the last swing. Right there. It's a little bit messed up. Okay. Now this is a forex pair. So we're gonna use this. All right, we're gonna use it. Hold on one second. All right, so we're gonna use this range, and we're gonna see how do we know where price is going. Okay, so let's go on a smaller time frame. A second, because it's a little unclear on the first on the daily. So right here, we have two consecutive up close candles. Price never hit there. Consecutive candles is what? Order block. Internal, external range. Right now, we are in internal because we're selling. So price came down low, traced up higher to a deep discounted area within the range. I mean, into a premium area. My bad. You know what I mean? We went into a premium area, and when we're in a premium area, we want to sell. Let's go down to a smaller time frame to see the willingness to sell. See if we see it on a 5 minute. Yes, we do. Yes, we do. What do we have here? This was probably 10 o'clock. I knew it. I knew it. Why did it have to be 10 o'clock? Well, I'll show you. This range is beautiful, actually. Price, this is the consolidating area. Price literally would have tapped if I was to get in a trade like this, it would have tapped me in and would have ran down and never came back to that point. However, we have an order block and a nice, beautiful fair value gap right here. Now, this would have been my entry. This would have been my entry right here. I would have sniped it and waited. Or consecutive 3 candles going up equals order block. Wow. Look at that. Tap me in. Give me the money. No drawdown whatsoever. That's what I'm. Look. This is what I'm saying, y'all. This is what I'm saying. Last 3 consecutive candles. Bow. You even have this one. Price didn't actually break though. That's the only thing. All right, look at this. If if you was to get in the trade, this hit your area interest to the T. Respected it. Bow. Came down. Came back. Hit the 50% of this. You could have, and that's another entry. Then if you miss that, 3 consecutive, coupled with the fair value gap, order block, come on. Come on. How? Where we taking it? Fuck it. We take it to this low here. Actually, you know what? We take it to this low because there's a fair value gap before the order block. And price just kept selling. Price just kept selling. But on my funded G, I'm gonna tell you something here. I'm gonna tell you something. It's on a 5 minute time frame, G. Yes, it's hindsight, but this is what I do. This is what I'm trying to tell you. It is hard at first until you get your model. Once you have your model, it's rinse and repeat. Rinse and repeat. So look, we get in, trade gets clapped hard. Pow. In trade. Boom. Right? We take it to this area here and get out. Now, with forex, right? I probably would put it at the midpoint of there. So midpoint of the fair value gap in that area. So I know for sure with the order block, I'm definitely getting in the trade. Stop loss right above this high. Because it definitely should not be going over there. Stop what we targeting? This low right here. Just in case price wants to go higher. That's a 1 to 7. Now, let me go and show. I'm gonna tell you how much I would have risked on that trade. I would have risked a 3 lot. Okay. Now, why 3 lot? Well, with gold, I do 2 lots. You feel me? I do 2 lots. So on on here, I'm definitely going a lot size higher. So we have the sell on gold. I mean on GU, we have the sell. It's funny how on this broker doesn't go actually to the fair value gap, and this is on 5 minute. It is the 5 minute too. Their wick is a little different, but it's all good. Nah, but if it had went in, yeah, it's right there. So I would have definitely targeted that right there. All right, cool. Sell limit. That's a 5. We're gonna do 3. 3. Take profit. Is that low? That low. Basically two, just shy of 2 grand. 3 lot, 2 grand. Price never came back. It just kept running and running and running. Overall, did it take any other bigger low? Let's see. Let's see. Because yes, it went into this fair value gap here with these lows here. So that mean I wouldn't know. I wouldn't have held it that long. Let me see. That's from 10, yeah, and oh to 3:15, 3 in the morning, and then continue selling. I probably would have waited. I'm up at 3. I probably would have waited and seen what it would have done, but I would have took at least 2 lots off that trade at that point and let that one just continue going. You feel me? That's what I would have done, right? I would have waited, and then as soon as I see a lot of choppiness like that and a clear sign of wanting to go higher, which it did here, changing the state of delivery, it was actually right here, and then continued. Yeah, no, I would have got out literally right here because this was like confirming that it's going. Came down, tapped here, and then just yeah, no. This area right here would have been the area that I would have got out the trade if I was to hold that one line. Probably would have put my my stop loss right here in profit and would have just took it. Let me just see, where did that go? So that would have been $3,200 if I was to hold the whole trade until that point. That's all you have to do, right? That's all you have to do. Let's go back to the hour time frame. Why? Oh, look. What time is it? 7 o'clock. It's the start of New York. 8 o'clock. Boom. Start going up higher. Retracing. What do we have here? This is where the structure broke initially. Like after everything's, a retracement back. Look, this is the range here to here. Why not here? Well, even if you did that, we're still in discount. So let's do it. Because that wasn't the swing to give the push, but people would ask, why not that? Because that wasn't the swing that gave the push. We're in discount. You can use that. Fine. Even if we use that, this is the range. This is discount. We want to go back into premium to get a better sell. Where do we go to? Well, we go to the structure break. What do we have here? What do we have here? Let me see. What do we have here? You guys are going to be like, what the hell? A mini inverse fair value gap. Inverse fair value gap right there. Let's go on a higher time frame. 2 hours, 2 hour chart. Nope. Nothing clear yet. 4 hour. Ah, fair value gap. Fair value gap. Taps into it. Sells off. Now let's see what time it goes, because time is important. This is 8 a.m. Push up, continuation, down. This right here would have been a good trade. Now, here, do we have a willingness to sell? Yes, we do. Fair value gap. Taps, order block. Inside the fair value gap is the order block. You tap it and then it falls. Does it come back? No. So what would have been your trade, Adam? I said my government name. It's all right. It's all good. Call me Dad. You could call me AB the Ghost. That's my trading name. I'm still here. You feel me? I definitely not gonna get my whole government out. You heard? Anyway, order block, fair value gap, taps, pow, false. Where is the target? Dang, you could all these lows here. This low. These lows are like more relatively equal right here than this one, than this. So these two lows is a good one right here. Wow. This would have been a good, because if that happened at 10, I mean at 8, that means this happened at 10 during the macro. Stop loss above that. We are selling to this low. It's probably a 1 to 3 or 1 to 4. 1 to 4.5. That's a good trade. This is the trade and you're done. You're done. Consolidation. or you could call this consolidation, manipulation to get buyers to go up higher, and then expansion. This is how we trade. This is how I trade. And this is how my team trade. And this is, I should make a song about trading. I should make a song about trading. So this is why my prop firm is going to be mad. Because once you go back and you start seeing, this is exactly what I look for. What time did, all right, 10:50 going into the 10:50 to 11:10 macro. Going into the macro. I don't even, matter of fact, here, just to prove to you that I'm right, look, 10:50 macro starts, pow, write it down to that low. That's it. That's it. Let me see how much that would have been. No, actually, let me see. No, no. Oh, wait. Actually, yes, 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 you're right. That would have been a 3,000 some dollar trade on the other one. Let's see this one. And I would have bust a 5 lot on that too. Where does it go? Okay, right here. I would have bust a 5 lot because I would have been up already. 3,300. 3,300, bro. This is what we be waiting for. That's it. Just wait. Just wait. Once you see a willingness to sell, and you see how I don't even 10:50 to 11:10 macro. It says it right here. Right here. That's it. That's it. That's all you got to do. Wait for this candle to show a willingness to sell. That is it. Once you see that, whoosh. Once you see that obvious candle, that's the candle that you take, and you take it to a low that makes sense, or a liquidity point that makes sense. That's all. That's all it is. That's literally all I do. That's the checklist. Let's go on. Let's go on a foreign pair. Let's take this off. Now, a foreign pair is a little bit different because the timing is different. On foreign pairs like the Asian pairs, Asian coupled, AUD dollar, which is on the Asia side of the world, and British pound, that's on the London side. You know what I'm saying? So, let's go to the daily first. You gotta start off. You know what I'm saying? You gotta go through the checklist. You have to go through the checklist. All right. Oh, let me clear some of this stuff off. I be trading this sometimes on my regular live account. You feel me? 20 days, right? You're bullish, right? We're bullish. So right now it shows that we're in bullish momentum. That's all. This is just that simple. Until we see a mean structure break like this to show that we're going lower, no. We need we need something bigger. We this is a strong structure break right here. This candle here, whoosh, break structure all in this range, taking everything out. Comes back and takes us lower. That's what we're looking for. Here, structure break? No. Retracement? Yes. Why? Because it didn't break this low. What about here? Why is it? You know why? Because we failed to swing higher. This is the candle that broke structure here. This candle right here broke structure. Whoosh. One, two, three, four candles. Whoosh. Daily candles. Whoosh. Came back. Retracement. Fair value gap on both sides. Respect. Bow. To the T. Bow. 2 days. Wait. Pow, pow. All the way down. Where you take it? There's a low here. There's lows here. There's a low here. Almost relative equal. You could hold. Once you see this candle here come back, wait for the retracement. It's going to come back down a little bit. Get out. Get in. Truth. Take it up higher. Come on. Come on. Come on. Now, this low would be ideal for me because these lows are relatively equal after it plays around. Once it came and took this low, I would probably have seen, hey, it's time to get out. You know me, I get excited sometimes. Yeah, that would have been it. That's a lot of days though. I don't think I would have held for that long, but probably on like a small live account. If I'm trading like $100 and I see a move like that and I know it's gonna go back to that, and I just bust like a point 15 and take it down. Like I'm gonna see what is that GA. I'm gonna see what GA would have gave me if I did something like that. Um, GA, right? Daily chart. That's a beautiful. That was like beautiful though. That's crazy. Yep. And TP would have been at those lows. So let's see. Now with a 5 lot, that's 28,000. But we're not doing that. We're doing point 15. 863, but yeah, that's wild. But 863 from $100. But for all those days, that's not really worth it. But hey, that it would probably when it got to that low, I would have just closed right there. I would have closed when it got to that low. That's okay. We'll wait a week. Um, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 19. Half a month. Yeah, that's wild, bro. Almost a whole trading month. It's all right. You could do that. Yeah, but still, I would hold something crazy, but not like that. All right, this is a range. Um, we didn't break actually, so it looks like we are. Yeah, look at this willingness to sell. What do we have here? 3 consecutive up candles, a close of a fair value gap. Um, 3 consecutive candles. This would be the area of interest here. Shit, shoot, how? And then how? All right, so it filled literally the entire gap. This candle It didn't go higher, but if we take this, right, from the bottom of the third candle, is it 1, 2, 3? So right here, it just it just like just missed it. Actually, no, it goes right in. It taps it. It goes right in between. It just, yup, it like just taps it. The spread. So you always put your limit just a little bit under. It's fine. It's fine. Trust me. I promise you, it's fine. Put it there. Now, where's the next part where it could continue higher? Right here. So what you do is you go to the lower time frame, right? Look for a willingness to sell. Actually, you know what? Before we even do that, let's count the days, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Um, actually, no. After this, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. After this break here, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So it's here. This swing to this swing. So it is. It is. So I mean, put this here. It's this swing. These two swings. Right. Willingness to sell. Fair value gap. Order block. Like it's crazy. Fair value gap. Order block. Enters. Let's go to the smaller time frame. 5-minute chart. Let's see. This is what I do. Do we have a willingness to sell here? We actually do, and it actually happened a little bit earlier. What time did it happen? 9:55. That is during the Asia session. Comes here, look, it just misses it. Just miss it by a little bit. And that's fine. We still in the area. Probably on a 4 hour we'll get a better entry. We'll go back and look. So we can like narrow it down. So we get that. Boom. This right here is definitely a good sign. AB, why you say this? AB stands for about business. Just let y'all know. Why y'all say this? Why you say it's gonna go lower here? Because we have this candle here leaving consecutive up close candles, a responsible candle to show that we're going lower. This candle closed lower than those candles here. Come here, 1, 2, 3, clap, pow, and never look back again. Come back a little bit, retrace, fill in this gap here. What time? 10:15, 10:05. That's the That macro I was telling y'all about earlier. Continue selling. Continue selling. Continue selling. And continue selling all the way down. Now, let's go and try to go on the 4 hour chart. And this is how you know. All right. So where is we have fair value gap right here. And you have order block actually no right here. This one goes higher here. So that right here is where a good entry would have been. See this? On a 4 hour time frame. Remember, the box is the area of interest. This is 50% of this range here. And everything goes according to plan. Now, taking a trade like this, right? Say if you took this trade, where this would be, look, you know why? Because this is the next area of interest. This is below the 50% and right before the fair value gap, a 1 to 3. Look at the entry. Entry is clean. With three lots, with three lots, this is what the 4 hour here. With three lots, actually, you know what? Yeah, right here. That's three, basically $3,090 right here. I'm sorry. I am sorry, y'all. But this again, once you look for those clues, once you take those clues, and this in this part of the live stream right here, this is where I salute the MMXM trader because he goes in depth with this too. I'm just explaining it in simple form, simple. But the way he shows, he goes a little bit more in depth with it. Same thing with ICT, like he gives more more insight. But I'm showing you from a simple standpoint. It's simple. All right. Well, that's all I have for today. It's Saturday. I hope you guys enjoy your weekend. You know what I'm saying? Just don't rush into it. Don't rush. Go back test, go over what I showed you. Look at the previous ranges from the swings. Look at the swings. On the daily chart, go back 20 days and see what the next move is or what the next move could be. You want to go from we once a high gets taken, that next swing that it goes to and where it left from, that's the next move. Excuse me. You want to take it higher there. That's the next high that you want to take. So once we go from here, I want to see price come here, consolidate, give a willingness to buy, and take these highs. That's what I would like to see. Is it going to happen? I don't know. We don't know. But until next time, stay focused, keep your eyes open, and happy trading.